Analysts have keenly observed the movement of commodities, with a notable surge and positive gains recorded in precious metals. Gold has for the first time peaked at about $5,000 an ounce. Economist Makwe Masilela says with the entrenched geopolitics, the impact is starting to show.
If you look into this whole base metals, precious metals, they have been going up, but the more focus has been on the likes of gold, which last week it has been up almost 8%, and for the year up 17%. Reason being, we've seen that there has been demand because of the geopolitical tensions. There have been demand coming from the central bankers. There have been expectations that interest rates will continue to go lower in the US, as we know that there's a huge opportunity cost to hold the likes of gold in an environment where interest rates are elevated.
Silver has skyrocketed by over 100%. Copper has topped $13,000 and platinum is holding firm near the $2,767 mark.
We've seen the likes of silver as well joining up, has been seen partly not only as safe haven, but remember the likes of silver gets to be used more or less as an industrial metal to some extent, the likes of palladium or copper, and we know that copper is also benefiting from the fact that it's seen as one of the future commodities because of the greener aspect part of things. Now, if you expect to see economies doing much better, now we are talking about the possibility of a trade deal between China and Canada, and China being one of the biggest consumers of commodities. So one says that as much as there might be some tariff tensions between the US and China, but China continues to open other markets, then demand should continue to be there.
The rand has also benefited from the decline in the US dollar and the firmer commodity prices, strengthening past 16 rand per dollar for the first time in almost 4 years. The current sell-off in US dollar denominated assets has also boosted the local currency. Economist Dr. Elna Mulman says this comes as no surprise.
Notwithstanding the significant appreciation of the rand exchange rate over the past year, as well as its outperformance of peers, our assessment models imply that the currency is reasonably valued at this stage. In other words, the appreciation that we've seen is supported by fundamentals. The key here is, of course, the increase in select commodity prices, such as some of the platinum group metals and gold. This means that South Africa should receive more export revenues if everything else remains the same. Other fundamentals also improved, including a lower inflation forecast trajectory given the lowering of the credible central bank's inflation target, as well as the improvement in our fiscal prognosis, as well as the credit rating upgrade towards the end of last year.
With South Africa being a net importer, the analysts believe a firmer rand will have a positive impact on the economy and the country's inflation. This could bolster a case for lower interest rate expectations going forward. Katlego Logodi, SABC News in Johannesburg.